Tonight we're doing overnight trading. I'm going to teach you guys the ins and outs behind this incredible strategy that's now funded over 2 dozen traders, which is kind of remarkable. And we've got probably over 100 people at least that are trading this strategy now, which is exciting. So every time we get a winning day, I'm always curious to know, did anybody pass a phase of their prop firm challenge, or did anybody get funded by chance? So those are always fun days when that happens. But yeah, like I said, so what we'll do today is I'll show you guys how the strategy works. I'll give you all the resources available that we have on the strategy. I'll show you how to trade it, the ins and outs, the nuances, all that kind of good stuff. We're gonna go over how to journalize, how to utilize the journal effectively with the overnight strategy. We'll also go over the statistics, like how it's performed over the months and over time, and like what you would expect as far as win rates go, what to expect as far as profitability, anything a trader would want to know that way. We'll go over. So we'll go over all the transparent numbers that are important to be aware of, and just some general expectations, right? Because it's a for some folks, this is a really different type of strategy depending on the background that you come from or the type of style of trading that you subscribe to. So, all right, guys. Well, let's go ahead and get started. Like I said, want to welcome everybody here. By the way, if you are new to the program, let us know what state or what country you're from in the chat box so we can welcome you here. Excited to see some new faces with us. Also want to give a shout out to those watching this on YouTube or those watching this in the recording on the website. Want to say hello to you guys and invite you to participate in any way that you can. All right, guys, before we get started, as always, I need to remind you about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, well, let's go ahead and jump into this. So let's go over the overnight trading strategy in a nutshell. So I'm always trying to figure out the best way to kind of teach this strategy. And I think the best way to start is to talk about, um, I think maybe where we'll start is talking about just the nature of a Forex day. Okay. So, like what happens in a 24-hour period. So, Forex trading is broken up into four different parts throughout a day. It's open 24 hours a day. It starts at the beginning of the week. So, on Sunday evening here in the United States, um, that's when the Forex market's open for the week. And it begins with the Sydney market opening up around 6 p.m. Eastern. Okay, so 6 p.m. Eastern, the markets are open for the week on Sunday, and they're open until 5 p.m. Eastern on Friday. So it's just a continuous open. During that period of time, or during that week-long period, every day we get different sessions, right? So you have the Sydney market, you have the Tokyo session, you have the London session, and the New York session. Those are kind of the four main markets that kind of control Forex. Okay. So naturally, when Sydney is open, a lot of the pairs that are associated, so Forex trading pairs that are associated with Australia or New Zealand, those pairs are more active when that market is open. You've got after Sydney, a couple hours later, Tokyo then opens. So the Japanese yen is a pretty common pair to be traded or currency to be traded during that session. And these sessions are open for 8 hours. Okay. So Sydney actually opens at 6 p.m. Eastern, and it closes at 2 a.m. Eastern. Tokyo opens at 8 p.m. Eastern, and it closes at 4 a.m. Eastern. Then after Tokyo, you have the London market, which opens at 3 a.m. Eastern, and it closes at noon Eastern the following day, or I guess the following morning. Then you have the New York market. New York Forex market opens at 8 a.m. and it closes at 5 p.m. Eastern. Okay. And that's basically your Forex day. Okay. That's what a day looks like. So because a day looks like that, you want to be trading currency pairs that are active during the session that corresponds to that time of the day. Now, not every trading session is created equal. Okay. This is kind of the key actually behind why we trade this overnight trading strategy. They're not created equal. Okay. So I've got here the euro dollar. I'm going to use this as an example. This is probably the euro dollar is probably the most commonly traded forex pair in the entire forex world. Okay. This is the most iconic pair. When people think of forex, they think of the euro dollar. All right. The euro obviously is most active during which session? It's most active during the London session, right? Because the euro is moving. I'd also say it's pretty active during the New York session as well. And there's an overlap where those are both open together for about 3 or 4 hours. Okay. That's a really good, that's a great time to trade the euro dollar because it's very active during that period. So just because a session is open, like the New York and London session, does that mean you can't trade the Australian dollar during that hour or during that period? No, you can definitely trade other pairs, but it just seems like there's more movement. Now, why do we care about movement? So movement is what creates opportunities. When the market goes up, there's opportunity. When the market goes down, there's opportunity. When it goes sideways, there's not a ton of opportunity. There's some money to be made, but not a lot, right? So we want to capture the market when it's most active. So if I were to pop quiz you just on this basic information that we've just shared in the last 4 or 5 minutes, if I were to ask you, 2 questions, like number one, which session would the euro dollar move more actively in, the Sydney session or the London session? I think all of you would answer London, right? Well, yeah, that'd be the correct answer. Another one would be like, would the euro move more actively during Tokyo? Like the euro dollar, would it be more active during Tokyo or during the New York session? Probably New York, right? Because New York overlaps with London, and the dollar is part of the currency pair. You got the euro versus the US dollar. And so you're trading the euro dollar when it's most in session. It's not really in session when Tokyo's being traded or when Sydney's being traded. Can you trade them during that time? Yeah, absolutely. But you'll notice the markets are kind of slower during that period. For example, right on this chart here, I've got the euro dollar pulled up on a 15-minute time frame, and I've got this sessions indicator. All right. And sessions, this is kind of nice. I can separate this into the 4 sessions I was telling you about. I got London, New York, Tokyo, and Sydney. This is on TradingView. It's a free indicator. Anybody can use this. And basically, what we're doing is we're just segregating the chart itself into different periods of time. I'm actually going to just turn this one on. This is London. I'm going to click OK, and it's got London highlighted in green. So everything in white is out of session, and everything in green would be in session. Notice how big the moves are during the green. Like today, for example, this was a huge move during the green. Most of the moves that happened this in the last, 72 hours probably happened in the during this Sydney session, or not Sydney, during Tokyo, or sorry, London. This is the London session right here. Here's London over here on Monday. Okay, here is London on Friday. Here's London on Wednesday, not, or Thursday, not as significant, but here's Wednesday. Very big move right there. Okay, here's London the other day. So generally speaking, you're going to see more movements during London. Now let's turn off London. Let's go back to the sessions and let's change this to, let's do Sydney only. Okay. You'll see that the market's a lot more quiet during this period. Here's yesterday, very quiet period during Sydney. In fact, we're actually, as we're doing this webinar right now, we're in the Sydney session. It opened about 2 hours ago, and it will be open for another about 6 hours. So the euro is going to be kind of quiet for the next 6 hours, generally speaking. It's not going to do a lot of, you're not going to see a lot of movement. There's going to be some, but not a ton. So here's Sydney from the other day. Here's Sydney from the other day. And here, and here, and here. And you'll notice like it's pretty darn quiet. It doesn't do a lot. Um, I would say the average that I am seeing is if you were to take the highest high of Sydney and the lowest low of Sydney, that range, we call that the Sydney range, would probably average around 20 to 25 pips a day. Okay. If you were to take the highest high and highest or lowest low of the London session, using the euro dollar, that's going to be 80 pips, 100 pips, 120 pips, right? So a lot more movement you'll see during the London session, specifically on the euro dollar, right? So what's interesting about this, so like I said, let's go back to the original topic. So in a 24-hour period, yeah, I got these 4 sessions. Goes Sydney to Tokyo to London to New York, and then a new day starts and it repeats itself over and over and over again until you get to the end of the week, and then that's a whole trading week, right? So what's interesting is each not all sessions are created equal, right? And so Sydney is kind of a quiet session just in general, not only because the euro isn't traded, but it's just quieter. No offense, but they just don't move as much money as like London does. London moves way more money. New York moves a ton of money, right? Those are kind of the two financial behemoths of the world, right? At least up to this point, it is. And so that's why you see a lot more um, movement happening during that time. Okay. Just preceding when London opens is the Sydney session. So you have Sydney and Tokyo that are kind of open congruently, and Sydney will close, and then about an hour later, New York will, or not New York, but London will open. And this is happening usually in our evening. That's why we call it the overnight trading strategy, is because the whole point of this strategy is to take advantage of the bigger movements that will happen when London opens. So since London opens at 3 in the morning Eastern, uh, unless you're up and able to get up in the middle of the night to trade that actively, most traders who live in the United States or Canada are just going to miss out on the London session. So, in order to take advantage of the London session, you have to be able to learn a strategy or have a way to take advantage of the market moves beforehand. Like you have to have some kind of method, like we do, like some kind of breakout method to be able to take advantage of those movements, right? Okay. All right, so that's I want to set the scene there. Okay, so let's now that we've kind of set the scene, let's kind of dive more into this. So let's go into I'm going to kind of get closer into the charts here. This is yesterday's trade or the trade from last night. So what the strategy does is it tries to take advantage of a potential breakout that will happen when London opens. So as a reminder, this is the Sydney session. This is usually happening around dinner time here in the United States. Okay. So when you're coming home from work and going to dinner or watching a movie, that is Sydney. Okay. So kind of get that in your mind, like, okay, to get a lay of the land as far as the market goes. That's what's going on right here.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Then about the time when you start to head to bed, it doesn't really matter where you live in the United States. Or Canada. It's just generally speaking, that's where this is. And by the way, I want to give a shout out because I know a lot of people watching this aren't necessarily watching this from the United States or Canada. I'd probably say like 80% are, but there's that other 10 or 20%. I know some of you guys are watching this in Australia, some of you are watching this in New Zealand, or you're watching this in the UK. Everybody can trade this. You just have to plan your schedule a little bit differently. For us in the United States, this is an overnight trade. For you guys in London, this is a trade that you'll take before you go to work, and you'll sit on this trade while you're at work. Okay. And you'll come home and you'll close it at dinner time, or when you're watching movies at night or whatever, you'll close the trade. Um, if you live in, and it's about the same, like if you live in Australia, you're gonna set this trade up like like at the end of work. Yeah, because you're basically setting this up at the Sydney close is ideal. So end of work day is the ideal time, or just before dinner. So before London actually opens, you're gonna want to get this trade in. So again, it just kind of depends on where you live, your timing, and I'll explain the timing, the best times, and so on, and when to get this in, and we'll get to that part. But basically, you're trying to take advantage of this breakout, a potential breakout. Last night was really perfect, about as good as it gets. Um, we had a really nice consolidation phase right here during Sydney. And then when the market opened, or rather the London market opened, the euro dollar just fell apart very nicely, actually. It just kind of like took off. Really no whipsaw, just a clear cut breakout, just perfect type of market. That's what we're after each day. In a perfect world, that'll happen every day. If it, obviously it's not a perfect world, and I'll show you how we deal with that. But um, if this were to happen every day, I mean, everybody would be a happy camper every single day, because last night was really, really good. So the idea here is just to take advantage of this breakout. So what we do is we come in here. In fact, I'm going to do a rewind on my charts. So what I did is I came in here last night around the Sydney close. Now, some of you can't stay up till then because that's kind of late. If you live in California or Washington or Oregon, it's a little easier to stay up until like 11 o'clock and get this in right at the Sydney close. But if you live in New York or Georgia or Florida, this is kind of harder because, but it can be done. And you can do this. Like, I don't want you to think you can't do this because, oh, it's like, oh, I wish I could stay up till 2 a.m. because that's when Sydney closes. Most people who live, in Georgia, Florida, New York, they still take the trade at just whenever they can in the evening. So 9 o'clock, 10 o'clock. I'd say later the better if you can, but I'm not going to ask you to change your sleep schedule. I used to change my sleep schedule around this. I only lasted about a month, and then I had to get back to my normal routine. So don't change your routine for this, other than you are going to need to give yourself at least 10 minutes a day. Okay, that I am going to ask you to do that. A lot of people ask me, what's the catch? How does this work? Like what? Well, yeah, there is a commitment here, right? Like you do have to give yourself 10 minutes a night, maybe 15 minutes a night when you're newer, maybe up to 20 minutes on your first couple of nights just to make sure you get it right. But yeah, that's the commitment. So yeah, don't change your sleep schedule up. Just do it. What will happen is if you have to set this up at like 10 p.m. Eastern, what you'll do is your box won't be at the full Sydney box here. You won't be at the end of the Sydney box. You'll be like right here instead. It'd be like, okay, I'm doing this 2 hours earlier than Steve or those on the Pacific coast or whatever. So I'm just gonna go in and get this in now. And that's totally fine. It usually doesn't affect us too much. And typically the highest high and highest low or lowest low of Sydney will happen in the first 3 or 4 hours of it being open, which is like right now. So usually by the time anybody in the United States goes to set this up, they have a pretty good idea of what the trade's going to look like anyways. So I don't want anybody to not trade this because they think, oh, I can't stay up till 2 a.m. Eastern. No, you don't. I don't even do that most of the time. Most of the time, I don't even do that. Even though 2 a.m. Eastern's 12 for me, I still take the trade usually between 10:30 and 11 every night. It's just my natural time to wrap things up. So and if your natural time is 9 o'clock, perfect. Just do it at 9. So okay. So okay, so let's get down to business here. So what are we doing? So every day I come in here and I wrap up the Sydney range. We also call this the Sydney box. Okay, so this is the highest high of yesterday, about right there. This is the lowest low. And I like to get these pretty snug. Well, no, I don't actually. Sorry, I didn't mean to say that. I like to get them snug and then I like to add a pip or two on the top of these. Okay. And you'll see why in just a second. But um I give myself what we call padding. So I'll wrap up, I'll get my Sydney box here and I'll chart this up on TradingView and I'll put like a pip on the top or a pip on the bottom. So I'll kind of force my box a little bit higher and also a little bit lower than the actual Sydney low. And I do that on purpose because sometimes brokers can manipulate and trigger your trade too prematurely. And they often do it at significant levels like a Sydney high or a Sydney low. So I try to stay away from that manipulation by giving myself a couple of pips of padding. All right. So you'll notice here I've got my box just this would be snug right there, but I'm going to pull it away just about a pip or two. All right. Same thing with the buy, pull it away about a pip or two, and that's perfect. Then what I do is I come into TradingView, and by the way, I haven't taken the trade yet. What I'm doing is I'm just mocking up what the trade would look like. Then I'm going to come in here and I'm going to place a projection sell. This is a really handy tool on TradingView. You can find this over here on the left-hand side of TradingView. On the Euro, just on any chart you're on, I use the euro dollar for this strategy. And if you come over here and click long position or short position projection, I can star those so I can have them on the ready each night, which is really nice. Okay, cool. So now I can come over here and I like to put my inch. So I'm going to do that again so you guys can see what I did. So I'm going to click over here on my short position. I'm going to click in the very bottom right corner and I'm going to click once and it's going to drop a projection onto my chart here. I'm going to put my stop loss at the top of the Sydney box and then I'm going to drag my take profit about 5 times what my stop loss is. So I have to figure out what my stop loss is first. This was about 21 pips or 22 pips yesterday. And then I drag my take profit about 5 times. Okay. And then I'll do the same thing for the buys. So I'm going to do a buy stop. So this is a true breakout trade. We're trying to take whichever way the market wants to go. So I'm going to go ahead and click right here in the very top right corner of the Sydney box. And I'm going to put my stop loss on the other side. And I'm going to drag this up about 5 times. And it's important you do this. One of the keystones of and pillars of this strategy is having a very high and successful RR ratio. Okay. So what does that mean? When we win really, really big. When we lose small. Okay. That is the name of the game here. We do take more frequent losses. You'll learn that in just a moment. This actually does have a technically would be considered a losing win rate. Win rate is below 50%. But the RR ratio is such that the strategy is very profitable because when we win, the wins are very, a lot bigger. And there's a couple of reasons for that. And you'll see why here. And I got to get to that point. And that point's fun because we get to go over the numbers. But this is very important because some people try to do it their own way. And, maybe they're like, 1 to 5's too far. I'm going to put this at like 1 to 3, or no, you got to do the 1 to 5, guys. Okay. We've done back testing, not only manually now, we've now done it through automated systems. We've got a robot that's gone out and back tested the RR ratio on the overnight strategy. 1 to 5, guys. You got to do the 1 to 5. Or I wouldn't actually be opposed if you even did like a 1 to 6 or a 1 to 7 um on your take profits. But yeah, you are definitely cutting yourself short in the long term if you move this down to like 1 to 2 or 1 to 3. It may even cause you to lose money in the long term. So definitely get those targets out each day. I know they're pretty ambitious targets. They are, because you'll often notice that those take profits are 100 pips each night, and you're definitely not going to hit that every night. But the few nights you hit them, it makes a whole world of a difference. So you really do want to get those out there. All right. You'll see it as we move along here. Um, okay. Cool. So this is what the trade would look like every day. Is you're coming in here for 10 minutes a night, you're mocking this up. You're coming in, in the evening, in the middle of the Sydney session or towards the end of the Sydney session, and you're just drawing the top and the bottom of Sydney on the euro dollar. You're putting a buy stop at the top of the Sydney range, and you're putting a sell stop at the bottom of the Sydney range with the 1 to 5 RR ratio. Okay. That's it. That's the trade every day. So this could change though. Like your every day, this box could be a little bit bigger. Some days the box could be a little smaller. Um, I a box that's smaller than 12 pips, I forced to. So here's a little nuance. This doesn't happen very often, but if your box is less than 12 pips, force it to 12. I never want to see a box smaller than 12 pips. Usually it just doesn't make a lot of sense to trade this strategy if your box is smaller than 12 pips. And then if it's bigger than 12, perfect. Just go like today's was 21 or 22. Perfect. Just go with that. One other thing I wanted to go over while I am doing this. So for those that are still kind of confused, the goal here is that when you go to bed, you can set and forget these trades, and the market can figure itself out. So you could wake up and there's a couple of things that could happen. One scenario is like last night, which was perfect. The market just broke out to the downside pretty perfectly. It just broke perfectly to the downside. That's the ideal world, is that the market will either break up or break down. We don't care. We just care that it breaks out in a just kind of a clean manner with no real whipsaw to the market. Just that's kind of what we want. And that's perfect when that happens. Uh, okay. So you're pretty much guaranteed to trade every night. You when you wake up in the morning, you got triggered, you got filled. It's very unlikely that you won't get filled in one of the two directions, if not both directions. Okay. So I just want to make that sure that that's very clear, which is kind of exciting because you're like, oh, I'm trading every day. This is awesome, right? Okay, so now if the market goes up or down, great. Now, what's another scenario? Well, the market could go up, trigger your buy, and then later it could come down, hit your stop loss on your buy because that's right there, and then ultimately trigger into your sell. And then the sell could win. That actually happened to us yesterday. We got triggered into the buy lost, but then we got triggered into the sell, and the sell made some money. That's another scenario that could happen. Those days are kind of a wash typically. You don't make a lot of money on those days. But that is definitely one of the scenarios. Another scenario that could happen, and this happens quite often, and it's the worst case scenario. So that's never fun, right? But we got to talk about it. So the worst case scenario is you could wake up and the market could go up, trigger you into a buy, and then the market could come down while you're sleeping, trigger your sell, and then it could come back up, hit your stop loss on your sell, and then from there you're flat. You have no trades open. You've now lost both directions. So imagine that feeling. You pull up your trading account and you open up your MT4 app or your DX trade app or whatever it is that you use, and you're like, "Oh, great. What a way to start my day, Steve. I just lost both directions." Right, right. That happens 2 to 3 times a week. So it's common. So it is part of embracing the overnight trading strategy. And you might ask yourself, well, why the heck would I trade something like that if it's going to do that? Well, you'll see. You'll there's more to it. But yeah, we're basically trying to achieve one certain type of market condition. We're trying to get a breakout market, and which will happen 1 or 2 times a week on average. And if we can get that one breakout day, that usually makes up, I mean, that's what makes a strategy work. Okay. And you'll learn more about that here in soon. But yeah, when this happens, we try to keep the losses small and tight. We definitely take our losses. It's an automatic thing. It usually happens while you're asleep. You'll wake up to it and find out, oh, that lost or oh, that made money. So those are the scenarios. You'll either make money or you lose money. And you could lose money both directions. You could lose money one direction. Um, yeah. Okay. So I wanted to make sure that's clear. So you're looking for a breakout each day. Now, if the trade closes at its take profit by the time you wake up in the morning, fantastic. That's going to happen maybe once or twice a month. So it doesn't usually hit the target. A lot of the times when you have a winning trade, the trade will actually close out via your own manual close of the trade. So you'll actually have to close this in the afternoon the following day. I usually close these trades about an hour before New York closes. So that's at 4 p.m. Eastern. If you want to close around that time, that's perfect. I would not suggest that you just close this whenever you feel like it. Once you pick a time that you close, make it part of your routine to close. And I've just chosen to do it around 4 p.m. Eastern. I'll even set an alarm, just quick little quiet alarm that'll tell me like, oh, hey, close that trade, and I'll go in and close it. All right. I would suggest that you do the same thing, but you don't. Here's the thing. You really do want to create some really hard and fast rules here where it's like, okay, this is what we do. Here's the deal. A lot of people, and I'm not saying that you all are this way, especially those that have been doing this a while, but for many people, this is the first time they've had a strategy where it's like cut and dry. Like this is what we're doing, exactly how we're doing it, and we're going to close like this, we're going to enter like this, and this is the first time they've ever experienced something like this. So, what's cool about this is if you actually go through, the combine here, and you just totally submit to just doing it, what ends up happening is when you start making money and you have that mindset, you all of a sudden you get emboldened to trade with more money. And that's a good thing because if you get emboldened to trade with more money because you've had success and you believe in what you've done, because you have a proven pattern of how you did that, it's not just some lucky trade. Because who cares if you make $10,000 of fake money on a demo account when you didn't even realize how you made that money? Versus what if you made $5,000 in a month trading the overnight trading strategy? You made a modest 3 to 5% return and you knew exactly how you got there. Well, now you feel comfortable opening up a prop firm account or using your own money to trade with because you know that, oh, wow, I've never felt this confident before because I've never followed rules this well before. Right. So, yeah, you kind of do want, especially as a new trader, you do want to have these types of, well, I guess you'd call them training wheels. I mean, I know plenty of veteran traders that are trading this strategy even though they don't necessarily need the quote unquote trading wheels because they're really good at what they do, but they're doing this anyways. Because why not? Right. Anyway, so let's continue on here because we got more to get into, but this is the setup. Any questions up to this point? Because the next part, we got to talk about the sequence multiplier and we're going to talk about the results of the strategy for the last part of the webinar. But I'm going to pause here and read everybody's questions. Um, Roger says, I had to get my daughter to the airport last night, so I set it up at 9 p.m. Mountain. My box was only one pip away from Steve's, and I scored a big win. Nice work, Roger. Excellent job. That's great. Mohammed says it would be so cool if you could automate entering trade based on time instead of price. Oh yeah, that would be awesome. I mean, that's actually what the bot does. The thing is, we have a bot that trades the overnight strategy, but it has some bugs still that we're trying to work through before we don't want to launch it to a group unless we know it works. So a lot of the trades that I still take are manual trades, just like you guys. And the cool thing is I mean, I don't mind taking the manual trades. Um, but yeah, that's in the works for sure. Wes says, click on the border of the range box, then double click in the box, and you can use the arrows for precise movements. Oh, nice. Okay. So click in the border of the range box, then double click in the box. Oh, cool. So you can box, and then you can use the arrows for precise movement. Okay, cool. Nice. I'm not exactly sure what I'm looking for here, but nice. You can also extend right and extend left. Maybe this is what you're talking about. And so you can get your the coordinates. Okay, let me actually go back into the settings. Extend that. Let's go to coordinates. Oh, nice. Yes, so that tells you exactly where the price is. Exactly. Very cool. And it will tell you as well, by the way, right here, this gray number right here, that'll tell you exactly where your buy is going to be. This will tell you where your sell is going to be, that gray number right there. Another pro tip, guys, when you're setting up these overnight trades, I would suggest that you um, work on a clean chart every night. If you have a lot of other stuff on your charts from days past, it's going to be very difficult to see the exact numbers where you're getting in and so on. Okay. All right, good. Okay, great questions, guys. Okay, let's jump into this. So I got to show you okay, so here's the deal. If this is all you were to do, if you were to use a fixed lot size on this every single day, the market's actually almost perfectly random that you would actually spin your wheels trading the strategy if there's no other edge. Okay, so we've kind of created an environment where there's possibility by trading this every single day strictly. But if you don't do anything else, you probably won't make a lot of money with this strategy the way it is just like this. So if you were to use a fixed lot size for your buy stop and a fixed lot size for your sell stop every single day, you probably wouldn't make a lot of money. Okay. So how do we make a lot of money with this? So it comes down to this. There's two reasons for this. We have this thing called the sequence multiplier, which is right here. This is it right here. Okay. So what the sequence multiplier is it's a matrix that I built uh, that tells you and me what percent to risk on our account on each trade. So since once or twice a week, the market is going to have a breakout type of day, and the market is almost perfectly random. Like the market will never have a whipsaw day where it's like just consolidation every single day. It can't do that forever. Eventually, it's going to have to break out. And a market also is not capable of just breaking out every single day. Okay. It's not capable of that. It creates inefficiencies when you don't have a when you have a single type of market condition that happens precisely and every single day. It's actually an unhealthy market. It creates for bad business practices and creates like strategies that could exploit inefficiencies in the market. And so because of that, the market is random in nature. Okay. The market's random. And so, like I said, part of the time the market's going to break out, the other part of the time it's going to whipsaw. And we don't know which days those are going to be. We don't know if tonight's going to be a night where it breaks out nicely or if tonight's a night that could stop out. And we also, and just because you had a winning day, like last night was a winning day, doesn't mean that tomorrow's going to be a losing, doesn't mean that tomorrow's going to be a losing day now because we just had a win. In fact, sometimes I've had winning days sequentially in a row. I've had losing days that are sequential and then flip flop days. So you never know, right? So you just got to trade it every single day, right? Okay, so the sequence multiply back to this here. So what the sequence multiplier does is it says, okay, if I'm starting out trading this strategy, I'm going to use a 0.25% risk. So we're not even just telling you this is the trade you're taking every day, but we're also helping you manage risk. Okay, so I'm saying, okay, I'm going to start with 0.25%. So that's a quarter of 1% that I'm risking on each trade. Both the buy stop and the sell stop are going to risk 0.25% of my account. All right. If that trade wins, great. You'll wake up in the morning, make some profit. You'll close them out, in the afternoon if they don't close naturally. If the trade loses, the multiplier, the way this works is the next night you go to set this up again, you'll increase to the next step in the sequence, which would be 0.38% on the 1.5 multiplier. There's also a 2x multiplier and a 1.25 multiplier that's a lot more conservative. I've been using the one in the middle. Most people, I'd say 90 plus percent of people use the one in the middle with me. That's the one that's kind of my comfort level, is the one in the middle. I feel like it's done very, very well. And there's reasons for that. But yeah, so 0.38%. If you lose that day, you go to 0.57%. If the next day loses, you go to 0.86. And the idea here is that you're increasing your risk slightly to the tune of 1.5 as a multiplier every day until you get that outcome, the breakout market. So if the euro dollar has a big breakout day and you're on day 4 and you get a 0.86% win and the market goes, 1 to 4, 1 to 3, 1 to 5, and it breaks out hard, you can only imagine how big that win is going to be, right? I'm going to show you some examples so you can see it in real time, like what that could look like in a trading account, right? And you go up to 6 days. So I will go up to 1.94%. I never like it when I have to go up to there. It's never fun because that means you're on 6 days in a row of losing. But that's my last day. So I have kind of a predetermined stop out plan. Like if it doesn't pan out, we don't get a win within 6 days. We call that bust. And bust is where if you don't get a win within 6 days, you have to restart the sequence the following day. So on the day 7, which there is no day 7, you would actually just restart at 0.25% again. All right. And just start a new sequence all over. And then it's just a sunk cost if you happen to go through 6 days. But we don't want to go past that. Like we don't want to create a day 7 or day 8 or day 9 or 10 on the 1.5 multiplier because the risk on each trade is just so astronomical that it just doesn't make sense to keep trading. So we want to keep that risk low to begin with, right? If you're uncomfortable with that, there's a lower multiplier. The 1.25 multiplier has a much lower risk, and you get yourself up to 10 days there. But that one doesn't make nearly as much money. In fact, it's about a 50 to 60% decrease in net profit if you go with this one. It's still worthwhile. It's still good. I also don't use the 2x multiplier all too much because you're doubling your lot size every single day. And I'm not a big fan of doubling really with anything. It's just a quick way to burn through your leverage just within 4 days. And I think that's not enough time to give the market a fair shot at getting you a breakout trade. All right. So that's the sequence multiplier. Let me show you what this looks like, okay, in action. These are actual trades and results from the strategy. So from actually taking the trade and showing you this part to managing the trade and the risk ratio of each day, these are actual trades that have been taken. All right. So let's kind of go through this here. So um, let me show you. This was a fun sequence we closed out last week right here. So this was September 23rd. I had a trade on my $100,000 account that made $4,239 one single trade. How many of you have ever done that before? I know a lot of you guys who are vets have now, but those of you that are brand new to trading, or like maybe you've traded Forex for a while, but you're new to the program. I mean, have you ever done that with a real live, either real money or with a prop from account that's funded or close to funding? That's really fun. Okay. Like if you haven't experienced that, you need to, because it's, I mean, from, maybe I'm crazy, but it's a fun feeling. Like you wake up and you do feel somewhat invincible because you're like, yeah, I just made what a salary might be for some people in one day. You know what I mean? Like a whole month's salary in one day. That's really fun. Okay. Like you got to experience that. But there's a process to get there. It's not free, right? Like there's definitely a cost. So let's go over what that looks like. So here's a sequence. So this sequence began on September 17th. Hopefully everybody can see this. This is a day that I began trading. I'd used the 0.25% risk per trade. I had my buy stop and I had my sell stop. You can see that these two trades right here. I had a 15 pip stop loss. I lost both directions that day. It was just a whipsaw day. There's just no recourse I mean, there's no recourse on that day when that happens. You'll get your money back later, but, but that's a sunk cost. That's just a day of loss. Okay. So I lost $250 on both trades that day. Um, and there's nothing you can do that day about it. Now, a lot of traders, this is something I've noticed is especially when I first started trade, we try to cover our losses the same day we lose it. I've learned that if you try to cover your losses the next day or the following week, just waiting for the right opportunities to come along, you'll get your money back that way. You never want to try. It's not a good practice to try to, and this is with any strategy, just not with Forex, not just with the overnight strategy, but try not to revenge trade the same day you lose money. Okay. I just in general, I've not seen that to be a good practice with any strategy. Um, Getting revenge is just getting up the next day to trade again. And revenge is good if it's done that way. But revenge the same day, never good. So that's one of the things we're doing here is if the wrong market condition just wasn't there, or if the right market condition wasn't there, just forget it. Just call it a loss and move on. Right. Like you just have to have that mindset of just like, oh, okay, that didn't work. Okay, on to the next. Right. All right. Okay. So that was a loser. So what did I do the next day? So here's the 18th of September. I have a buy stop and a sell stop. Um, and I did a 0.38%. Why did I do 0.38% risk? So I increased that a little bit because that's what the strategy calls for. Slightly increased risk. Okay. So 0.38% the following day. Okay. I lost both directions that day. That's not fun, right? That's never fun. By the way, get used to it. It happens 2 to 3 times a week. It's insulting. You'll wake up to it and it feels like you got slapped on both sides of the cheek. But that's the cost to get to those big wins. So just embrace it. It's not fun. I'll definitely help console you when it happens. We'll console each other, but we move on, right? So, all right. So anyway, that lost. Okay, next day, what do we do? Okay, 19th of September. 0.57%. Okay, so why did I do 0.57%? Because that's what the strategy calls for. I'm on day three now because I got a loss on day one and day two. So I'm on to day three. Okay. And I did get a win, but here's the deal with this win. This is a really good example. Let's do an equal sum here. Let's do equal sum. This $809 of profit. Is that enough to cover the losses from the previous couple of days? Not quite. I'm still down $451. So if you take the $809 that I won on this one trade, still not enough to cover the two losses from the previous day and the two losses from the day before. So the we continue is basically what I'm saying. So that day won, but it was kind of an interesting day because it wasn't big enough. So on the 20th, I took the same trade. I went to take the same trade again, and it was at 0.57%. So why 0.57%? Why did we not go up to 0.86? So anybody who's a veteran with the strategy, why did I stay at 0.57 on the 20th? Exactly. So we had a partial win, didn't we? Yeah. So on the 19th, since we did win a little bit of money, although it wasn't enough, it was still a win. So what I do is I preserve you. What you want to do is if you really don't want to burn through those steps in the sequence if you can avoid it. Okay. Just as a precaution because you want to give yourself more opportunities to win. So I try not to burn through those. And so if we have a partial win, even if it's not enough to cover the sequence loss, we stay at that same risk the following day. Okay, so the next day we stayed at 0.57 and then I got whipped again, right? So that's never fun, right? It's like, oh man, I just gave back all the money I just made and now we're even worse in the hole. Right? It's not fun. Yes. I mean, it's definitely not fun at all. Okay, so I'm down 0.57%. Okay. So what do I do on the 23rd? So on the 23rd, we risk 0.86. But so since that was a loss both ways, really no justifying that. So you have to move up to the next level of the sequence to 0.86. So we're on day four now of the sequence. Then look what happened on the 23rd. Huge win. Huge win, right? 69 pips made, risked 14 pips, perfect breakout day, made $4,239. So now if you do an equal sum from that $4,000 all the way down to the beginning of the sequence. That's a net profit of $2,648. And that's after all the net losses, right? So you have you have the gross losses and the gross profits. The net afterwards comes out to $2,648, which is great, right? That's a 2.6% return if you average it out over the 4 or 5 days that it took about a week to get that. So a 2.6% return. That's great. We'll take it. Right. So that's where we're at. Like that's basically the idea of the strategy is you're um trying to get to the point where you get those big wins. Now that might be kind of surprising. A lot of you might be like, how did that win get so big? You only made 69 pips, and some of these other days you lost. Like right here, you actually made 44 pips and it was only $809. So, like, what made that win so ferocious? Like, why was it so incredible? And there's several factors. Number one, let's just go through the variables. If your stop loss is already kind of tight to begin with, which this day was kind of modestly tight, you had a 14 pip stop loss to begin with, right? You also made 69 pips. You're also on day four of the sequence multiplier. And so the amount of pips that were made, the amount of pips that were risked, the fact that you were on day four of the sequence, the fact that the market went nearly totally to your target, all of that kind of contributes to getting down to those big, huge wins. Okay. That's what you're trying to get to. So if you think about it, when you're taking these trades, Um, you're there's two main things that get you to to your big profits. Usually by the time you've had your win, you get to your win, you're on like day 3 or day 4 on average. Okay, which means you're higher up on your sequence multiplier. So thus your lot size is already bigger. And then this leads me back to the chart. So the fact that you're already asking the market to provide a huge opportunity as far as your take profit goes, if you do get a massive breakout day on a higher lot size, you got both of those variables working in your favor at the exact same time. And that's what creates those mammoth, colossal like wins that we're always trying to get to. So they're not going to happen every day. Most days you're not going to make $4,000 on a day. Today was actually nice. I made almost $1,500 on my 100K account. Today was a decent day. Wasn't colossal, but it was good, right? Um, so that's what we're trying to get to every day with the strategy is get to that point. And it's averaged about a 5% return a month. Actually, today is 5 months since May 1st when we started tracking this. So it's actually up a little over 5% a month, which is kind of awesome. Let's see. David says, do you ever only set up one side and not both if there's a strong trend set up? Nope. That's a great question, David. But no, every day you're setting up both the buy stop and the sell stop. Yep, yep. Every day we don't do any variable stuff like that, or anything that's subject to our view of the market. Um, we do that with other strategies. So like we'll take off our strict goggles with other strategies and we'll kind of look at things subjectively and interest rates. We'll look at fundamentals, like we'll look at everything on other strategies. But this one is one of those like I'm trying to make sure everybody's like, okay, these are our like strict goggles here, right? Everybody is on the same page. We're doing the same thing, right? Every single day. So yeah, it's always a buy, stop, and sell stop. And it's also doesn't matter if there's news events either. Some news events will work well into your favor. Some news events will cause you to lose. So because of that, we don't know which news events are going to be good and which ones are going to be bad. So we trade them all. So it's pretty simple. It's just every day you're setting this up, rain or shine, right? That's a great question. Okay. Any other questions, guys? We got to start wrapping up here. So as I'm wrapping up here, I want to show you guys this. So this is our win rate of the strategy. The strategy actually, so here's a good thing to look at. It's taken 161 trades since May 1st. It's had 91 losing trades, 69 winners for a almost 43% win rate. Gross profit on a 100K account is $62,000. Gross loss is 34,000. Net profits about 20, almost $28,000. That's the net. Average winner is $900. Average loser is $375. RR ratio is at a 2.38%. So okay, so those are just some basic statistics I think people would want to know. By the way, before I wrap up here, because we got to get going, unless you guys have other questions, you guys can access more information about the overnight trading strategy here on the website. So if you go down to members, if you go to members and click on overnight trading, there's a book here that I put together on the strategy. You can read through the book, go through the methodology. You can go through the commitment, understanding the strategy, the entry. You can go over the sequence multiplier if you need a recap on where the sequence multiplier is. You can go over the exit. There's another video on the strategy right here. It's all right here. So that's all available. Also, these are the live updated results of the strategy. So there's a couple of different versions of the strategy that we manage and monitor, and you can view those right here. These are the transaction summaries. So you can actually see actual trades that have been taken on the strategy each day, their results, what risk was used. So if you're ever in doubt, like what risk should I use today, just follow me. So just come in here and be like, okay, Steve's going to use 0.25% tonight. Perfect. I'm going to use 0.25%, right? Good question. David says we'll wrap up here. Do you do any other pairs or sessions? Yes. However, the euro dollar is the main focus, so you can trade the pound dollar instead. I huge recommendation here though, guys. Once you pick one currency pair, stick with it. Don't be switching around between currency pairs because you think one might be better than the other. As soon as you pick one and it's not working and you switch to another, the one you left will actually start working again. So like just stay strong to the one. And like if you're somebody that has like good luck or bad luck, or you believe in those things, like the way you get rid of bad luck is to stay consistent. Okay, because the market's perfectly random. And so if you just stay stalwart and consistent, you'll burn through your bad luck. It'll go away just because you're just so gosh darn consistent that it's got nothing on you because you're bulletproof as far as following the rules. So all right, guys, I really got to wrap up here. I wish I had more time in this class because there's so many other things I wish I could cover. But hopefully this was helpful. Really appreciate you guys coming. Hopefully this was something that you guys could learn from. We are going to do COT report. We're going to talk about the scanners here in just a moment. Give me about a 1 or 2 minute break and we'll get back on to talk about the COT data. Thanks so much, guys. We'll see you guys in the next call.